Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's start taking your queries. We have Gaurang Shah who's joining us on the fundamentals, while we have Kunal Bothra who's joining us on the technicals. And let me ask this question which Johan has asked us actually. And I'm sure a lot of them must be asking this question. So let me ask this to both of you all. Johan wants to know which sectors should he be focusing on this year based on the budget. Gaurang, loads of announcements in the budget, though everyone's focused only on the one big announcement that the finance minister made in the budget, but there are a lot of other sub-segments also that are impacted based on the union budget. Where should one focus, or which sectors should one focus on when it comes to formalizing a strategy for this year?
Thank you so much, Cheryl, for having me on the show, and morning to all of you all. So by default, I think after the announcement, FMCG consumption has been fired up on all cylinders, and the policy changes that the Honorable Finance Minister has put in the individual tax slab has been accepted with both the hands. So FMCG would be the sector, the stocks like Dabur, Tata Consumer, Godrej, HUL, ITC. And if consumption has to move, Cheryl, then we are also of a belief that your quick commerce will also contribute. So names like Zomato and Swiggy, because they are the platforms which enable delivery. And demand is growing. Stocks have corrected recently. Valuation-wise, if you have a long-term investment time horizon, both look very attractive. On Zomato, as a disclosure, we have a fundamental coverage on the buy side. On Swiggy, since it slipped below the IPO price and it is near that IPO price, we had given a subscribe from a long-term point of view. Other than that, I think banking, finance, power, infra, all these sectors look attractive, keeping the budget theme in mind.
You know, Gaurang, I want to come back on that point, because given the fact that yes, with the proposals or the tax proposals that were given by the finance minister, we are bound to say that the consumption pack will do well. But when you talk about consumption, there are two segments. One is consumer staples, one is consumer discretionary. Which side of the fence do you think one should be tilted at? Because given the fact that you've seen a rapid change when you talk about lifestyle changes or the way how the consumption basket has moved, people want more electronics, more autos. So what's your take? Do you think that's where then the tilt has to be, though you've said that you like Dabur and likes of those companies?
So I think you need to strike a balance between both, because first is going to be your consumer staples, right? You are not going to go and buy a motorcycle or a three-wheeler or a four-wheeler. First, you will see how full your tummy is and how are you going to fill it up. So FMCG related stocks which are into this basic theme, like I mentioned, Dabur of the world, Tata Consumer, Godrej Consumer. Then you go on to the, after you satisfy your hunger and you take care of your basic needs, daily needs, then you move into consumer discretionary, likes of two-wheeler, three-wheeler, four-wheeler, gems and jewelry, something like a Titan, etc., etc. So these are all your discretionary spend. We like two-wheeler manufacturing companies, Bajaj Auto, Hero MotoCorp, TVS Motors, Eicher Motors because of the high-end motorcycle Royal Enfield, and of course commercial vehicle in form of Eicher trucks, and JVs with Volvo. We are also positive on gems and jewelry, and gold has also been doing its bit. It has moved to its real all-time high. So Titan has a diversified business. You have got gems and jewelry, you've got wristwatch, you have got personal care, you've got perfumes, you have eye care and accessory related business. You've got Carrot Lane acquisition, which is a high-end premium jewelry. So, we need to keep a mix of both staples as well as discretionary.
All right. So Kunal, let me come to you then. Yes, because when you look at the charts, you see that big spike coming in the FMCG pack or the FMCG plays when the finance minister, or just when after the finance minister announced the budget. But now how should one place their bets when you talk about charts? Do you think the FMCG stocks are at a price that you can look at it right now? Or which are the other sub-segments that one can look at?
Good morning. First of all, budget as an event are generally, of course, a lot more emotional event with respect to the sentiments flowing into the markets and the market participants. But I think I look at this as more of statistical events. And then looking at the historical precedents, we've seen that in this kind of a scenario, the FMCG, the auto stocks, they tend to do pretty well. I look at this in terms of a breakout and a potential breakout for many of these, sectors and stocks within the sectors. For example, you start to see, breakout coming back into the likes of Maruti, a stock which has been a huge underperformer. That should, augur very well for the auto pack. You've seen, the likes of Eicher Motors coming back into a lifetime high breakout, about 5,300, 400 levels. M&M has managed to come back again from 28, 2,900 to now 3,000, 3,100 plus levels. So I believe that it's better that to concentrate on the stocks which have been relatively strong. And I believe in that sense, I would believe that the auto pack looks to be the most strongest, sector as of now out of the two packs, two sectors which you're discussing.
Right, but Kunal, I believe that all of us, and also Gaurang, all of us who kept saying that budget is a no event, it's just a one-day event, I think you had the finance minister prove it wrong with the bazooka of a budget that she announced on Saturday, that is. Next year, Kunal, just a heads up, now February 1st is a Sunday.
I know. I know that.
Right, but yes, let's move on with the next query, Shreyansi.
Well, absolutely. And the next one, Gaurang, firstly, good morning. The next one that we actually have, let's keep it going with the theme that has been in the spotlight then. And the next one that we have is coming in from KVS Money, writing to us about Trent 40 shares. Average cost was 6,500 rupees. Gaurang, what do you make of this one?
I'm sorry, I couldn't get the name of the stock. Is it Trent?
Yes, that's right.
Well, so I won't give a outright comment on Trent, but let me put my views on the sector and one stock that we cover, which is in line with what Trent is doing, and that is Shoppers Stop. So, there was a time when a lot of people moved from actual footfalls into the store to the e-commerce business. The trend that I have seen over the last couple of years is that, the satisfaction that you get when you step into a store physically, see the product that you want to buy, feel it, and then bargain and put a price across and you acquire that product is not when you do with e-commerce. E-commerce, there's a lot of disappointment in terms of product quality. And there has been a lot of shift from, that offline to online and from online to offline again back into, footfalls. So we are excited about the sector. Trent is one of the strongest players. Of course, we've seen the performance in the last maybe about year and a half, 2 years. You look at the move on Trent. They have done Zudio, which is doing, auguring very well to the balance sheet contribution. It's one of the strong competitors, but since we don't have a coverage, I won't give a buy, sell, and hold. But a very strong, competent company in the retail side. We like Shoppers Stop.
Right, Kunal and Gaurang, I'll come back to you once again for a combo view coming in. And this one is coming in from a viewer. Let me just check the name of the viewer. This one is coming from Revant. He is a short-term swing trader though. He has L&T 707 shares, average price is 3,415 rupees per share. And now he wants a technical and a fundamental view. I like how a short-term swing trader wants a fundamental view as well when it comes to L&T, and all because of the budget, given the fact that the budget on the surface seems to be more a consumption push budget than an infrastructure or capex push budget. That's what the first glimpse of the budget, that's what everyone felt like. So now given that in mind, what should his strategy be going ahead? Kunal, in the short term, how is L&T looking on the charts? Then I'll take your view, Gaurang.
No, I definitely believe that the stock is, has gone through a recent selling pressure, but then I think it's been a quality stock. It's managed to withstand such kind of, budgets and such kind of events historically over the last decade and more. I believe that should not be a surprise going forward also for L&T. Technically, 3,200 has been a major support for the stock over the last 2 years. I think it's tested this range almost 4 or 5 times in the last 2 years, and it's trying to come back into that kind of a retest of 3,200 mark. I believe closer to that level is where you should look to average.
All right, that's for L&T on the technical front. And like I said, it's amazing how even you have those who actually see charts wanting to know fundamentally L&T, how does it look like? Then Gaurang, what's your view coming in on L&T? What should one do? Given the fact that everyone feels that maybe the thrust is not that much on capex, but definitely it is there. It has been growing year after year.
So Cheryl, first of all, my humble advice to our good friend is that either you are a trader or an investor. You can't be sitting on a fence, okay? And more importantly, Cheryl, if you are a swing trader, you need to be extremely proactive. I hope my good friend Kunal will agree with this. So, you need to decide and be on one side. On the fundamental side, we've been maintaining a positive view on L&T for a long time. We currently have a buy recommendation on L&T, and our targets that we have set aside is somewhere close to about 4,200. But my friend, you need to decide whether you're a trader or an investor.
Well, Kunal, I'm very interested in knowing whether you concur or not when it comes to Gaurang's take coming in on whether he should be looking at fundamentals or technicals. But the next one that we actually have, Kunal, is coming in from Bharatwaj, writing to us from Coimbatore, writing to us about Exide Industries, 1,320 shares, buy price was 427 rupees. What do you make of this one?
So I completely agree with Gaurang's point in that you have to decide that whether you are a swing trader or not. Coming to the point of Exide, I think the last 3 quarters, what you've seen is a very sharp drop to the stock from 600 plus levels to almost 350, 70 thereabouts for the stock in the last 3 quarters. And I think we've not seen the stock falling such sharply, and especially that took after a rise of almost 100% for the stock in the early part of 2024, where the stock moved from 250, 70 levels to 600 plus mark. So which means that the stock has gone through almost like a 75 to 80% retracement of the entire gain the stock had seen the first couple of months of 2024. I believe that these are classical entry points from a long-term play. The stock has also fallen significantly below its 200-day moving average, making the stock and the risk reward from a long-term play very attractive. So would suggest a buy on Exide.
Alright, so that's the take coming in on Exide. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. The next one, Kunal, that we have is coming in from Satya. He's writing to us from Kerala, wants to know about a couple of counters. Now, he bought HAL at 3,900 rupees and CAMS at 3,700. Now, he also wants to know if he should average, if that is better, and entering CDSL after averaging is something that he should be doing.
I think, it's difficult to now categorize, CDSL could be a better bet than the other two. I believe that, both of these stocks, CAMS as well as, HAL, both of these stocks, they've gone through their fair share of price correction as well as a time-wise correction. What typically happens is that when these stocks come back into a strong support territory, the pain in the last leg of the correction is much more severe. The volatility is very high, but then I think that's where one has to start looking out for stronger buying opportunities. I believe that both HAL as well as CAMS on their respective charts, they start to look very attractive from a long-term play. Yes, there could be a heightened degree of volatility into these stocks, but then I think if you're a long-term investor, it should not deter your the course of action for you. So it depends on your time frame as well as your risk appetite. I would suggest that a buy on dips or buying at current levels could be a good strategy for these names.
Right, this one's coming from Naman Devara. He wants to know about ICICI Prudential, 180 shares of ICICI Pru at a price of 775 rupees per share. He's saying that the earnings in the quarter gone by were not that great coming in for this particular counter, Gaurang, though he wants to know about an outlook for ICICI Pru for a period of 6 to 12 months. But given the fact that he's watching the earnings print very closely, so I'll get a fundamental take on this one.
So I would say extend the time horizon, firstly, Cheryl, because 6 to 12 months with life insurance related companies' earnings reported and a likely appreciation on your investment, it looks a little bit difficult. But if you do have the liberty of time being on your side, and if you extend it by 1.5, 2 years, then I think life insurance companies are turning around in terms of reported numbers. Earnings are likely to improve. That's what we believe. And on the fundamental side, we do have a buy and a hold recommendation on ICICI Pru from a long-term point of view.
Alright, and that's a take coming in as far as ICICI Pru then is concerned, and that's the recommendation coming in from Gaurang on the time horizon as well that the investor should be looking at. Next one, Kunal, is coming in for you. Rajendra, writing to us from Mysore, wants to know about Vedanta. Actually, he bought the shares at 477 rupees. Now, he's not mentioned the number of shares purchased, but nonetheless, what do you make of this one? Because he wants to know if you should retain or sell at this point.
No, I think you should hold on to the stock as of now. I understand that the metal counters, the metal stocks are going through a tough phase where many of these stocks have been very wobbly, very volatile. Vedanta, just about end of 2024, the stock was almost perched at its new high around the 520, 525 mark. And then this, this leg of correction has managed to make the stock come back into retesting its previous monthly lows around the 400, 420 levels. So I believe that it's a phase for the stock on the downside, which could probably indicate that maybe you could be in for some more short-term further correction into the stock. But I think since you're a long-term investor, looks like I believe that you should hold on to the stock further. So I would suggest to hold on to the stock as of now.
All right, then with that, we come to the end of this edition of Buy Now, Sell Now. Thank you so much, Gaurang, as well as Kunal, for being part of the show and taking as many queries as possible in this limited time frame. But on that note, viewers, is a goodbye from Shreyansi, myself, and the team that put the show together. Thank you so much for watching Buy Now, Sell Now. Stay tuned. Markets Noon coming up next.